Alright traders, I just wanted to make a special video. Make this video for the Forex World chat community, which is hosted by young lady Chrissy. So thank you for inviting me to your chat room, and hope to see you guys at the webinar on Sunday. But just wanted to give you a little quick look at some of the things that I do here, how I trade Ichimoku. I notice a lot of you guys do a lot of scalping, so just really wanted to talk about the differences that I'm going to be showing you. I'm not going to be showing you any scalping, but you could do the same things that I'm showing you on any time frame. You could scalp with the same techniques. It'll just be a lower time frame, but you're looking for the same things. But as you go to the lower time frames, you know, you have to be such a really good trader to trade the lower time frames, because the market's is not as stable, okay? And so you have many more false signals if you're relying on certain aspects of your trading. So what I'm looking at here is the EURCAD. I'm just showing you a really quick couple things that I look at. So when you get a TK crossover, a lot of traders like to take that crossover. I never take that crossover unless it's really close unless price is really close to the crossover, because normally when you get that crossover, here's a secret that you all probably don't know, but once you get that crossover within 10 candles, that price is going to be back within the TK zone. Now I'm not saying that always happens, but that's the norm. So within 10 candles, you're going to see price back at the TK zone. So when you get to the TK zone, you can trade off of that zone. So that's what I wait for more so. So what I like to catch is a market that's trending. So I'm going to talk about a trending market. I'm going to show you a couple things that I'm looking at. So this market is trending. You're looking for bounces off of this level. So I'm not scalping per se. What I'm looking for is when I get into a trade here, I'm looking to trade. Most of my trades are going to be a good 150 to 300 pip trades on one trade. So that's what I'm looking at. And I usually, if I'm going to lose, it's going to be around 50 pips. Okay. So winning trade is going to take me about, so if I don't have to be a great trader, I can be an average trader, 50%, and beat the markets, because I just don't have, I want to win more trades as far as how much I win. So if I'm going to win 100 pips and lose 50, I'm ahead all the time. All right, so that's what you look at. So basically we get a lot of bounces off of this level. You get bounces off of your Kijins, and these are where you're going to take your trades. So what we look for is a pullback to that level and then take the trade. We look for price action at this point. So you look at trades. You had trade opportunities here. You had trade opportunity here. You had a great, nice trade opportunity right here to get into this long opportunity. So what you're trading is inside out, basically. So I'll talk about that more when we look at when you come to the session. But then we also look for our profit targets, and targets are easy to find because you could first of all go by support and resistance levels. So is this a relevant level? You could see this level is going to be a double top. So when price gets there, I'm going to be kind of cautious. I'm going to be looking for that pullback move where price is going to drop, because even Ichimoku is slower than the market. So Ichimoku may think that the market's going higher. As you look here, you could see the market pushed up to this level, but then look what the next three candles did, and then the market dropped. All right, so you're going to look for those same things. That's going to be a counter trend trade, or just off a resistance trade. All right, but then when we come back to our level over here, so I don't want to take too much of your time up, but when we come back over here, we're looking at, if we take a trade here, we're going to try to trade to this level. Now we also look at trading the ABCD levels, okay, which would be basically my Ichimoku observation theory, and I'll talk about that more too, but try to explain that in the session a little bit, but I won't be able to talk about everything. So watch price here. Watch how the price action acts when it gets to this level at about 159.501, because you could probably get a counter trend trade back to the downside. Now there's other levels that I'm going to trade. So I trade fractal levels a lot. So I'm not going to talk about that until we get to this session, but there's so many trades you could take off the fractal level if you're not getting trades off of Ichimoku level. So I have levels that I look at. So what we trade is level, signal, and trigger. You got to have that level, signal, and trigger. If you have the level, the signal, and the trigger, you can make a trade. All right, so you need those three things. And then the reason I don't trade, I mean, a lot of people trade and scalp and day trade. I feel like this. I spent a lot of time sitting at charts. You're going to get to the point where you don't want to sit there all day taking trades. So I come back to look at the chart maybe once every 4 hours, or once or twice a day. I already know what trade I'm looking at, what trade I'm looking to get into. And once that trade triggers, I have alerts set to let me know when I'm at my level. And then I just take the trade. I don't have to be stressed out. I'm chilling. I'm going back out, hanging out, doing my thing. You know what I'm saying? And then I don't have to sit at the charts all day. So a lot of times when you're scalping, you got to sit at the charts. And also when you're scalping, you're making more trades. The more trades you make, the higher the opportunity for the market to beat you, because you're not going to beat the market all the time. Okay, so you got to be careful. So yeah, but I mean, each person has to do what they feel is best. So these things that I'm showing you could even do when you're scalping. You know, you're just going to be looking, say I'm looking for 150 to 300 pips. You may be looking for 20 pips, 10 pips, 20 pips, 15 pips, you know. But the more so when you're trading 10, 15 pips, if you win, you got to win 2 or 3 good trades, and you can't have, your losses can't be too big, or else you just wasted your 3 trades that you took. All right, so let's look at a couple pairs. And so I'm not going to show you some Ichimoku stuff because a lot of things are moving. So I'm going to go just show you a couple things that I'm looking at to take trades off of. And trades, when I tell you about a trade, they don't usually happen like right away. You got to plan this stuff. You got to sit here and watch as far as your level and make sure when you get to that level. So like now we're looking at this level, price is at this level. All right, and you can see this level was a strong level. So when we were in sessions, we were talking about this, and I'll try to teach you more and talk to you more about this kind of stuff, what we're looking at with this ABCD and the wave analysis as far as Ichimoku wave theory, and then trading to the upside. We caught a good trade moving up to this level, but now we're moving down off of a level, and you can see the market overall structure is sideways here. Look at it, sideways. It's between these 2 levels. So the market's bounced back down to this level here, which is at 81.610. So now what I'm looking at, when you get too far, the 2 things, you had a flat Kijinsen, but the market was able to move farther. But when the market's at a support level and you're distance from Kijinsen, that's called market disequilibrium. So the market's not in equilibrium. You have more sellers than buyers. That's not an equal market. That market is not a market in equilibrium. So the market likes to be in equilibrium. So what's going to happen more than likely, this is where buyers are going to probably start to come in. So we plan to take a trade here, and we wait for the pullback move. They were going to catch the trade off of this level. So what I do here, you could see the market bouncing down off of this level, and you could see where buyers are starting to come into the market. A little rejection here, and we want to see how this candle closes. But it's Friday, so this is a daily candle, so we're not going to be getting into the trade. We'll be looking for sometime next week for a trade, and we're going to trade at least to this point. So maybe a good profit of, depending on where we got in, you're looking at maybe 175 to 265 pip opportunity. Doesn't mean we're going to get that, but that's what we're going to shoot for, right? So let me go to my 4-hour time frame, because I look at the daily to get the bias. Now I go to the 4-hour time frame. I like to take Ichimoku off the chart. Now if I'm trading the 4-hour time frame, I already have a trading opportunity because the market came down to this level, bounced. I'm going to enter at this level right here. You see where we are? Now Ichimoku is going to suggest you trade short, but I have to teach you and tell you how to understand how to trade this, because we're counter trend trading basically, and we're still taking a signal off of what Ichimoku is telling us, because it's telling us disequilibrium. All right, and we're at support and resistance level. You can't base everything on Ichimoku. All right, so the thing here, we got price showing us a rejection here and a bounce off of this level. So with the bounce on this level, my entry is at this point right here. So I want to see the close a little bit above this point. I want to make sure we close above here, because we got nice indecision candle, a little rejection, then indecision. We're trading that indecision to the upside, stop loss a little bit below that point. We're going to trade couple levels. We shoot for levels when we're trading, so we want to make sure the market gets to this level first, and if the market could violate that level, we're going to look for the market to get to this level. So you just watch the market. Now sometime the market may not give you exactly what you want, so what it may do, but you got to know how to stay in your trade. The market may fool around down here. As long as it doesn't come to our stop loss, we're good, and make sure you can afford that stop loss. And then next thing you know, maybe the market takes off and hits our level, and then we got our targets, right? So that's what you're looking at with this Aussie yen, and I'm going to be talking about this more. I'll discuss it more in the session, and we'll look at how we can trade this. Now when the market opens, I'd like to see the market not gap above, not really open above this level here, because we're getting ready to close here in about an hour and a half. I want to see the market maybe open somewhere in this area. All right, and then I'm going to show you how we're going to look for that trading opportunity. All right, so keep that on your list and on your chart. and on your mind, because maybe you could, instead of getting a scalp trade, you get a longer swing trade, which could last a couple days for you to get in some good profit. And it could be just one good long day trade that takes a whole day, but we'll check that out. All right, so let me show you Swiss franc. Let's go to Swiss franc yen. Look at that. See, I probably got members. My members are probably mad at me because I'm not showing them this right now, but we'll get together. We'll get together. So I'm going back to the daily time frame. I start off on the daily. This is what I'm looking at. Now, guys, look at this. This is a big, good trading opportunity. You can make some profit here. So let me show you here. You're sideways with the market here. You could see where you're bouncing off of this lower level. Let's take these mid levels out of here just for now. You're bouncing off of this level here, and you're bouncing off of this level here. All right, you had a double top up here. Boom, boom, market drop. Didn't know it was a double top there, right? Boom, market drop. But you knew it was one here. Boom, you catch that trade to the downside because you see the rejection candle, enter below that level, shoom, market takes you in. All right. So now what I'm looking at now is this support level here at roughly 112, 787. Right. So looking at that, I have two big things here. And I like that this is the daily candle. I'm going to go to the 4-hour time frame. I'll trade this on the daily time frame. So what I'm looking at here, you got a TK crossover. Everything's bearish based on Ichimoku signals, right? I'm going to be counter trend trading because I'm trading this disequilibrium. The market is in disequilibrium. All right. That's not what the market wants to be. It doesn't want to be a market in disequilibrium again. So when you get too far from Kijinsen, look for that market to pull back, or else that market's going to just sit there and stay. It's not going to go too far. All right. So looking at this, what I'm going to show you is I'm going to look to trade. This candle closes as is, pretty much as a rejection candle. You had indecision, rejection, indecision, rejection. We'll trade above this level, stop loss a little below that level. Now you got to make sure you can afford the stop loss. So you got to either change up your lots, or else you can't get into the trade if it's too much, because you don't want to risk more than 3% of your capital on these trades. So, and that's not per trade. That's all your trades open together, 3%. All right. But you want to get above this level with the entry. So we're going to automatically, when I see this kind of a candle, I'm going to put my entry order in here. Okay, so I'm going to have an entry order there. I'm going to put a stop loss a little bit below the level, because the market's already came to that level, so you want to be a little below. Now check your make sure you could afford the risk here. All right, and if you can't afford the risk, then you can't take the trade. But when the market, suppose the market closes today as is, like I said, you got roughly another hour and 15 minutes. If it closes as is, then when the market opens, we're trading this level. We're trading a close above that. Not even a close. We're trading when the market gets to that level. We're trading there. All right. And we're going to shoot for some targets. All right. So first target we're going to look for is this level here. We're going to shoot for that level where Tinkinson is. See that? And then we're going to shoot for this upper level. And then if the market could get higher than that, we're going to shoot for this top level here where the cloud is, this flat cloud. And then eventually where Kijinsen is. All right, but we got to go in stages to this level and then to Kijinsen. And I'll try to keep you updated if I'm in your chat room at that time and anybody takes this opportunity. A good opportunity to make some profit. So if we thought about profit, we would be thinking there's a possibility of getting that'd be a good 95, 160, 200, and 250 there. Now, we have to see how things play out. So what I do now that I got my bias on the daily, I said I would enter like that on the daily, but I want to go to the smaller time frame, which is my 4-hour. I go right to the next lower time frame, 4-hour, to get into the trade. So if you were just looking at the 4-hour, you would look at the day at the 1-hour. But now I'm going to the 4-hour to see my trade. Now 4-hour has kind of yielded the opportunity, but now I'm going to wait, because see, this is the true opportunity, because see this support level and this big rejection, and then the market dropped lower. Now we learned to walk this trade right here, because we could have entered the market way down here on the long. So you walk this rejection candle, but my entry is going to stay pretty much the same, because we're trading this rejection level. All right. So on the 4-hour, you want to get past Kijinsen, you want to get past this level here, and then you want to get up to the cloud here. And then I like to do this also. So go back to your daily. you want to mark your levels, all right? So you want to know what a level is. So if I did one thing and I said price is going to pull back to the Kijinsen, I would mark that on the daily and then go to the 4 hour and say that's where I'm trading up to, at least the max. That's where my overall target is. All right, but I don't really set a take profit level, because when the market gets to my level, I have an alert. When it gets to my level, I look for the price action to tell me if it's going to go higher or should I take my profit, right? So therefore I try to maximize that profit. So let's go to one more opportunity. Let's look at the US dollar Swiss franc. All right, there we are. There's the US dollar Swiss franc. You could see that we're on the 4 hour time frame. I go to the daily time frame to play this thing. So daily is going to be a little bit different now. Now we're looking at a little bit more Ichimoku, but the only thing I don't like is the flat market here. All right, so we have, when I told you we trade level, so we may have the level because we're at the level. Signal, we need a signal and a trigger. I'll talk more about signals and triggers in the session that we have. So we're at the level already, but we don't have a signal or trigger. So we're going to be watching for this trade, but you got a TK crossover that developed. So some traders like to take that automatically. I don't take that automatically, because first of all, if you would have taken it where it was, let me show you something. You're in a drawdown right now, right? Because you took the TK crossover trade, now it dropped. All right. So what you want to be looking for, don't take that TK crossover trade. It depends on where the market is, how close you are. You want to be real tight to Kijinsen. But with this trade, now what we're looking for is the bounce and then move higher. And we're going to trade up into the cloud here. So when I start doing Ichimoku price analysis, we'll talk deeper in the session again, but we're going to look for wave theories and we're going to look for price observation. So one thing we like to use is this trend-based fib extension tool. Now I have numbers set in here, so you won't see the same thing on yours if you try to use it like I'm using it. So the first target that you would have been looking for this thing to go to is right there. So that's where I'm going to shoot for right now, because price pullback now, really I would be looking for 1, 2, 3, 4 level. So that would be more like this. So if we enter the trade, we'll be looking for price to go still at this level pretty much. That's going to be our first target, second target, third target at the top of the cloud. All right, because this is a 1-to-1 ratio that we're looking for. You always look for that 1-to-1 ratio because the market loves to do it. And again, I'll show you that in the session. So be prepared for some learning in the session and then see if you can apply it. I'm looking for this trade. So what I'm looking for, let me draw it out so you understand what I'm looking for. You could see what the market's doing. 1, 2, 3, 4. Now I'm going to disregard that and I'm going to go 1, 2, 3, 4. Because we didn't get the fourth leg yet. So the market moves in N waves. And that's what we're getting ready to look for the trade here. Now, being that the market didn't really have that much momentum because it's been flat here. It's flat. You see, it's trading between these levels, not giving us much. We have to be careful. So that's why we still say we need a level, signal, and trigger. So we do have the level. So I'm going to go to the 4-hour time frame to see what we got. So 4-hour time frame already showed me that we got a bullish engulfing. Traders would be afraid to take this trade. We got a bullish engulfing. You'd be in the trade right now. Boom. Stop loss below this level. But traders would be afraid to be in this trade. Now I want to see more. For me, I want to see more what the daily is going to yield. And because I'm not going to be late getting into the trade, I just need to make sure that we have that reversal. So the daily's not really showing the reversal all the way yet. It does show a little rejection off to the Kijinsen. But again, I'm worried about that flatness here. But let's look at one last thing. So divergence. There is some divergence. All right. And with that divergence, that's going to help me to get into trade. Now, not a lot of divergence because that divergence probably kicked off right here already. So I'm going to look for the bounce off of this level, trade to the upside for some good profit. So I showed you 3 opportunities that I'll be looking at. If I get one of those opportunities and it works out for me, it could be a pretty big trade. All right. So as far as like, I don't have to sit around and look at the markets all day and try to get in trade. I could go live. I could have a lifestyle. I could go lift weights. I could go play the keyboard. I could go, do whatever I want to do. When the weather gets really hot, you could go out chilling and swimming and doing your thing, but you just know you check your charts every 4 hours or so and you're good to go. All right. But if you have to sit there all day and make trades, after a while, many years of that, it's going to get rough. All right. And will you be able to keep that pace? So you want to develop a pace that you can maintain. You don't get burned out and such. All right. So hopefully that helped you all out a little bit. Don't forget, we're going to have that webinar session for you guys at the Forex World on Sunday at 5 p.m. And traders from FX at One Glance, same thing. You see this, and we'll see you guys in the session also. So hope this helped you all out. Until next time, traders, have a great one. God bless. So long.